You, me, everyone we know, we all rely on one fundamental thing, right?
Oh, yeah.
Our paycheck.
Absolutely. It's the engine.
It really is. It drives our daily lives, funds our dreams, provides that, bedrock of financial security. But what if that reliable stream, that steady income, suddenly just stopped?
Yeah, it's a scary thought.
It is. It keeps many of us up at night. And here's a statistic that might genuinely shock you. More than 1 in 4 20-year-olds today.
1 in 4, wow.
Yeah, 1 in 4 will experience a disability, maybe an injury, maybe an illness that keeps them out of work for at least a year before they even hit retirement.
A whole year minimum.
Exactly. So it's not some rare thing. It's surprisingly common. And, well, it can be financially devastating.
What's truly fascinating here, I think, is that while so many of us diligently think about life insurance.
All right, protecting loved ones after you're gone.
Precisely. But disability insurance protects your loved ones and you while you're still here. It's arguably even more likely to be used. And the stats show it's often the first major financial crisis many families face, not the last. It's not just about replacing income. It's about safeguarding every single one of your future financial goals.
Stopping them from getting completely derailed.
Exactly. So our mission today on this deep dive is to really explore how disability insurance acts as this vital income protection. We're going to break down what it is, how it works.
And ultimately why it's, well, pretty much a non-negotiable part of any solid financial plan for you.
That's the goal.
Okay, so let's dive in and uncover how you can safeguard your financial future against, well, the unexpected. Okay, let's unpack this a bit more. We've heard that rather stark statistic, but let's get down to brass tacks. What does disability insurance actually do?
Yeah, good question.
Because for many, it still feels like a kind of nebulous concept, even though we hear it's a leading cause of financial hardship for working adults.
Right. Well, at its core, disability insurance basically replaces a portion of your income if you become unable to work because of an illness or an injury. Think of it like a financial bridge or maybe a life raft when your main income stream is suddenly gone.
Gotcha. A life raft. I like that.
Yeah. So if you're out of commission, a policy will typically pay you a monthly benefit. It usually replaces somewhere between, say, 40% up to maybe 70% of your pre-disability income.
40 to 70%, so not always the full amount.
Rarely the full amount, and there's a reason. Often, those benefits are tax-free if you paid the premiums yourself with after-tax money.
Oh, right. That's a huge point.
It is. So that 60% might actually feel closer to, say, 80% or even 90% of your usual take-home pay.
Oh, okay. That makes sense.
And that slightly lower percentage also kind of subtly encourages a return to work when you're able, which helps keep premiums more affordable for everyone.
That tax-free detail is a really crucial nugget right there. But here's where I think it gets really interesting for a lot of people. When we hear disability, many of us automatically picture something specific.
Like a workplace accident.
Exactly, like a serious accident on a construction site or in a factory. But is that the whole picture? Is that what this insurance really covers? What are the actual boundaries here?
That's a critical distinction. And yeah, it's a common misconception. Disability coverage is not just limited to on-the-job injuries.
Okay.
That's where something like workers' compensation would typically step in.
Yeah.
Instead, disability insurance covers illnesses or accidents that happen anywhere.
Anywhere, like at home, on vacation.
Yep, at home, playing sports, just living your life, which means it covers a surprisingly broad range of conditions.
Such as?
Well, we're talking everything from, say, a severe back injury that keeps you laid up,
Yeah.
to needing extensive cancer treatments,
Wow.
to debilitating mental health conditions like severe depression or anxiety, if they actually render you unable to perform your work duties.
So it's really comprehensive.
It really is. It's designed as a safety net to stop an unforeseen health issue from completely wrecking your financial life,
Yeah.
no matter where or how it happened.
Got it. So it's less about the cause where it happened and much more about the impact on your ability to actually earn a living.
Precisely. That's the key.
Okay, that makes perfect sense. Now that we understand what it protects, you'll find it's not really a one-size-fits-all kind of thing, is it?
No, definitely not.
Let's break down the main categories you'll likely encounter.
You're absolutely right. Understanding the difference between short-term disability, or STD, and long-term disability, LTD, is really key to getting the right protection.
Okay.
Let's start with short-term, STD. This type of coverage is really designed for those temporary disabilities. It usually kicks in relatively quickly after something happens.
How quickly?
Well, typically after a very short waiting period, they call it an elimination period. It might just be a few days, maybe a couple of weeks.
Okay.
And that short waiting period helps keep the premiums a bit lower by, not covering every single cold or flu day. It makes the policy more affordable for the slightly longer stuff.
Right. So it's for those immediate, unexpected things that put you out for a bit, like maybe a broken arm or a tricky recovery from a common surgery.
Exactly. That's the sweet spot for STD. The benefits from an STD policy often last for a shorter duration, typically around 3 to 6 months.
3 to 6 months.
Yeah, though some policies might stretch up to a year. And while it's shorter, STD usually replaces a higher portion of your income,
Oh, interesting. Why higher?
commonly around 60% to 70% of your wages, because it's meant to bridge that really acute, immediate gap before LTD might kick in or before you recover.
Okay.
So it's ideal for things like recovering from surgery, a significant but, temporary injury, or even childbirth. Actually, pregnancy and related complications are a very common reason people use short-term disability.
That makes sense. Can you give us an example?
Sure. Let's say you have a short-term policy with a 2-week elimination period, 14 days, and a 6-month benefit period.
Okay.
If you unfortunately get hurt in an accident, you just can't work for, say, 4 months,
Right.
the policy would start paying you after those first 14 days are up. And then it would keep providing those monthly benefits for the rest of the time you're out, up to that 6-month maximum.
So it keeps the immediate income flowing.
Exactly. It ensures that immediate stream doesn't just dry up completely.
That sounds like a solid strategy for those, immediate temporary bumps in the road. But life, as we all know, can throw much bigger curveballs, right?
Absolutely.
What happens when an illness or injury stretches out, not just for weeks or months, but potentially for years? How do you protect against that kind of really extended income loss?
Yeah, and that's where long-term disability, or LTD, becomes just absolutely critical. This is the coverage for those more serious extended disabilities,
The big stuff?
the big stuff. Serious injuries, major illnesses that keep you out of work for many months or even years. LTD coverage typically starts after any short-term coverage you might have runs out,
Okay.
or after a longer waiting period than STD. An elimination period of maybe 90 days or even 180 days is pretty common for LTD.
3 to 6 months waiting period.
Right. But once those benefits begin, they can really last for years. A policy might pay out for a set number of years, like 5 or 10,
Or longer.
or even until a certain age, commonly age 65, which is essentially until you normally expect to retire.
Wow. That sounds like a much more significant safety net. For those truly catastrophic, life-altering events, the kind that could literally wipe out a family's financial future without this protection.
It truly is. LTD generally replaces a slightly lower percentage of your income compared to STD, usually in the range of, say, 40% to 60%.
40 to 60%.
Though some policies can go a bit higher, maybe 66% or even 70%. This kind of coverage is absolutely crucial for life-altering conditions, like a major stroke or a severe chronic illness like MS, or maybe ongoing mental health challenges that just prevent you from working long-term.
Okay.
Now, a key detail to understand with long-term policies, and this is where it gets really important, so listen up.
Okay, leaning in.
It's the definition of disability clause in the policy. You really want to look for what's called own occupation coverage.
Own occupation. What does that mean exactly?
It's kind of the gold standard. It means the policy pays benefits if you can't perform the main duties of your specific job.
My specific job. Even if I could technically do something else.
Exactly, even if you might be able to do some other, maybe less demanding or lower paying work.
Okay, hold on. So an own occupation policy means, let's say, a skilled surgeon damages nerves in their hand and can no longer perform surgery.
Right.
They'd still get benefits under own occupation, even if they could technically work as, say, a medical consultant, or maybe even a cashier.
Precisely. That surgeon scenario is a perfect example.
Whereas in any occupation policy, they might argue, well, you could still work as a cashier, so no benefits for you.
That's the risk with any occupation, a much stricter definition. It might only pay if you're unable to perform any job for which you're reasonably suited by education, training, or experience.
Wow, that's a massive difference. It could leave a huge income gap.
It absolutely can. It could force you into work you're overqualified for, or maybe work that just doesn't align with your health limitations, leaving you significantly underinsured.
Okay, own occupation is definitely something to look for then.
Highly recommended, especially for specialized professions. So for a concrete LTD example, picture a policy that starts paying after that 3-month waiting period.
Okay.
and that it continues providing those monthly payments until you either fully recover and can go back to your job or until you reach age 65, whichever happens first.
That provides real, sustained peace of mind.
Absolutely. It lets you focus on getting better, not on how you're going to pay the mortgage next month.
Okay, this sounds vital. I mean, truly vital for pretty much everyone who works and relies on that income. So what does this all mean for you listening right now? Where do you even begin to think about securing this kind of protection?
Well, look, the universal recommendation from basically all financial planners is pretty clear. Everyone who works and depends on that income should really have disability insurance.
Everyone.
Everyone. Your income isn't just money, right? It's the foundation. It pays for everything else. Your home, your kids' education, your retirement savings, your hobbies, everything.
Yeah.
Losing it can be just financially devastating. Honestly, far more likely to happen and potentially more devastating than, say, your car being totaled or even a house fire.
That's a powerful comparison.
It is. So at a minimum, securing long-term disability coverage is really highly advised, simply because those prolonged disabilities have the biggest financial impact, and they're the hardest to, self-insure against with savings.
Okay, so where's the easiest place to start looking? For many people, that's probably right at work, isn't it? Our employers often offer benefits we might not even be fully aware of.
Absolutely. That's often your first and maybe best stop. Many companies offer group disability insurance plans.
Group plans, okay.
This can include short-term disability, which might cover things like maternity leave or recovering from surgery like we talked about.
Right.
And many also offer long-term disability insurance, LTD, that typically kicks in after maybe 3 or 6 months. Sometimes your employer might even pay the full premium for a base LTD policy.
Oh, really? Free coverage?
Yeah, covering maybe 50% of your income. And then they might give you the option to buy additional supplemental coverage up to maybe 60% or 70%.
So what's the advice there?
Simple. Find out what you have at work. Check your benefits package. Talk to HR. If your company provides a base level of coverage at no cost to you, definitely enroll. I mean, it's essentially free income protection.
Can't argue with free.
Exactly. And if you can buy more coverage, what they usually call voluntary supplemental coverage, strongly consider it, especially if you don't have, say, 6 months or a year's worth of expenses saved up.
And group plans have other advantages too, right?
They do. They're often more affordable than buying an individual policy on your own, and crucially, they're usually easier to qualify for. Often there's no medical exam required, especially when you first become eligible.
Okay, that sounds great if your employer offers solid plans. But what if the employer coverage isn't quite enough? Or maybe you're self-employed or a gig worker and you don't have those group benefits readily available. And what about potential limitations with those group plans?
Yeah, those are really crucial points. Employer plans are a fantastic starting point, but you absolutely need to understand their specific terms.
Like the definition of disability.
Exactly. Sometimes those group policies might have that weaker any occupation definition we discussed earlier, or the income replacement percentage might cap out lower than you'd ideally want for your lifestyle. And a really big one. Group policies typically aren't portable.
Meaning if you change jobs.
You lose that coverage when you leave the company. Poof, it's gone. So if your employer coverage isn't enough or isn't available or you want something you can keep regardless of where you work, then exploring an individual policy becomes really essential.
Okay, an individual policy, how much does that typically cost?
Well, it varies, of course, based on your age, health, occupation, and the features you choose. But a general rule of thumb is that a comprehensive individual long-term disability policy might cost somewhere around 1% to 3% of your annual income.
1 to 3%. That seems manageable for such critical protection.
It often is, especially when you weigh it against the potential loss of 100% of your income. That investment can absolutely be worth the peace of mind.
Okay, so what makes individual policies potentially better or different from group plans?
The big advantages are really customization and control and portability.
Customization, how so?
You can tailor it much more specifically to your needs. You can adjust that elimination period, the waiting time before benefits start. Maybe you choose a 90-day wait instead of 30 days to lower the premium if you have some savings to cover that gap.
Okay.
You can also choose the benefit period, how long the payments will last. Maybe you want it to go right up to age 67, depending on your retirement plans.
And you mentioned portability.
Right. An individual policy is yours. It stays with you, even if you change jobs, start your own business, whatever. That continuity is huge.
Are there other features you can add?
Yes. Individual policies often allow for what are called riders. These are optional add-ons. A really valuable one is cost of living adjustment, or CLA rider.
TLA. What does that do?
It means if you're on claim for a long time, your monthly benefit will actually increase periodically to keep pace with inflation. It protects your purchasing power over potentially years or decades.
That sounds incredibly important for long-term claims.
It is. Another good one, especially for younger professionals, is a future increase option, or FIO rider.
Future in...
Yeah, it lets you buy more coverage later on as your income grows without having to go through medical underwriting again. So you lock in your insurability now.
Gotcha. And of course, with an individual policy, you can make sure you get that strong own occupation definition.
Absolutely. You have much more control over securing that crucial definition for the strongest possible protection.
Okay, this is all making sense. But here's where I think a common thought pops up for many people, myself included sometimes. Can't I just rely on my emergency fund if something happens? Why go through the trouble and expensive insurance if I have decent savings?
That's a very logical question. And look, having an emergency fund is incredibly important, don't get me wrong.
Right, rule number one of personal finance.
Absolutely. And it can certainly help cover that short waiting period, that elimination period on a disability policy, maybe those first 90 days.
Okay.
However, let's just run some quick math. Let's say you need, I don't know, $3,000 a month just to cover your essential living expenses, mortgage, food, utilities.
Seems reasonable for many.
Okay? Even if you have a really robust 6-month emergency fund that's $18,000 saved up.
Which is great.
It is great. But if you had no other income coming in, that $18,000 would be completely gone in just 6 months.
Wow. 6 months flies by when you're not working.
It really does. Now, imagine you're out of work for 2 years due to a serious illness or recovery. That's $72,000 of income lost just based on that $3K a month need.
$72,000.
Yeah. Very few people have that kind of cash just sitting around outside of their retirement accounts.
And you definitely don't want to raid your retirement savings prematurely.
Absolutely not. You'd face taxes, huge penalties. It could derail your entire retirement plan.
Yeah.
Disability insurance ensures you have that continuous income coming in to cover bills for potentially long stretches, protecting your savings and your retirement from being wiped out.
Okay, that makes the case pretty strongly. But what about the government? Isn't there Social Security, disability insurance, SSDI? Isn't that supposed to be a safety net?
SSDI. Yes, it exists, but it's often misunderstood as a reliable primary safety net. The reality is quite different.
How so?
Well, first, it's incredibly difficult to qualify for. The definition of disability for Social Security is very strict. Generally, you have to be deemed unable to do any substantial work.
Any work at all, not just your own job.
Right. Any job that exists in the national economy, considering your age, education, and work experience, not just your specific higher-paying job.
Wow, that's a high bar.
It is. And the approval process is notoriously lengthy and complex. It can often take months or even years with multiple appeals.
Years while you have no income.
Exactly. And even if you are eventually approved, the average benefit amount is often quite modest. For many people, it's rarely enough to cover typical living expenses on its own. Plus, there's a mandatory 5-month waiting period after the date Social Security determines your disability began before you receive your first check.
So difficult to get, potentially takes years, benefits might be low, and there's a long wait anyway.
Pretty much. It's really intended as a baseline, a last resort safety net, not a comprehensive replacement for your income. Private disability insurance, whether group or individual, offers far more comprehensive, timely, and flexible protection that's actually tailored to your income and needs.
Okay, let's try to put all of this together. Let's paint a picture, a real-world situation for you listening so you can truly visualize the impact and, well, why this matters so much.
Yeah, let's do that. Imagine you're, say, 35 years old.
Okay.
You've got a mortgage payment, maybe 2 young kids who are active in school, sports, and activities.
Life is busy.
Exactly. And maybe you're the primary income earner, perhaps working in a physically demanding job, or maybe a highly specialized profession that required years of training.
Got it.
Then one day, completely out of the blue, you suffer a serious spinal injury in a car accident.
Yeah.
Totally unrelated to work, just bad luck.
Oh, man.
And suddenly you just cannot work, not for a few weeks, but for an entire year, maybe longer, because of the recovery and the intensive rehabilitation required.
Okay, nightmare scenario.
Yeah. So, scenario A. You don't have disability insurance. What happens?
Oh.
You have zero income coming in for that entire year. You'd likely burn through any savings you have very quickly.
The emergency fund we talked about.
Yeah.
Gone in months.
Gone. Then you'd likely struggle to pay the mortgage, the car payments, the kids' activity fees, even basic utilities. You'd probably rack up significant credit card debt just to stay afloat.
Adding huge financial stress on top of the physical pain and recovery.
Immense stress. It impacts the whole family. It's a recipe for financial disaster, frankly.
Yeah, that's grim. Now, scenario B.
Okay, scenario B. Same accident, same injury, same year off work.
Oh,
But this time, you do have a good long-term disability insurance policy in place.
okay.
After that initial waiting period, maybe the first 90 days, which perhaps is covered by your company's sick leave or an STD policy or your emergency fund,
Right.
you start receiving a check every month
Hmm.
for, let's say, 60% of your previous salary, potentially tax-free.
A regular check coming in.
A regular, reliable check. That money allows you to keep up with most, if not all, of your essential bills. It keeps your family afloat, maybe allows the kids to stay in their activities, and most importantly,
You can focus on getting better.
exactly, it allows you to focus all your energy on your recovery and rehabilitation without that crushing constant panic about financial ruin hanging over your head.
That comparison really drives it home.
It really underscores why people call it insurance for your paycheck. It provides that essential peace of mind, that stability, allowing you to prioritize healing when you need it most.
Okay, so wrapping this up, what does this all mean for you? Our deep dive today has hopefully shown pretty clearly that disability insurance, it's not just another policy on some long checklist.
No, it's foundational.
It really is. It's an absolutely key part of a truly solid financial plan. Please, if you take one thing away, don't overlook this.
Please don't.
Start by checking your employer benefits. As we've discussed, that's usually the easiest place to start, often the most affordable way to get some coverage in place.
Find out what you have.
Exactly. And then, if needed, seriously consider supplementing that coverage with an individual policy to make sure you have truly robust protection that meets your specific needs and income level.
Yeah, and reiterate the goal here. You really want to have enough coverage so that if you simply cannot work, you can still comfortably pay your essential expenses and maintain a reasonable version of your lifestyle.
Keep the lights on, roof over your head.
Right. And this raises, I think, an important question. Obviously, we all hope you never, ever have to use this insurance.
Of course.
But if you do, you will be incredibly, immensely grateful that it's there. If we connect this to the bigger picture, think about it. Your ability to earn an income. That's quite simply your most valuable financial asset.
More than your house, your car, your investments.
Absolutely.
Yeah.
Because it's the engine that enables all your other financial goals and dreams, saving for retirement, putting kids through college, traveling, supporting causes you care about, just enjoying your life today. Protecting that engine is paramount.
So maybe think about it this way as we close out. Beyond just paying the bills and keeping the lights on, what else does your paycheck actually allow you to do? What passions do you get to pursue? What plans are you making for your future? What precious family moments, big or small, are funded ultimately by your ability to get up and go to work each day? How does truly protecting that ability not just safeguard your finances, but actually empower your entire life to keep moving forward, even when the unexpected inevitably hits? It's not just about what you might lose, it's really about everything you get to preserve.